Thanks for staying with us on SABC News. China shares edged higher on Tuesday, led by gains in property and new energy stocks on policy support, even as worries over COVID-19 flare-ups and slowing economic activities lingered. The Shanghai Composite Index was up 0.2%. The Hang Seng Index added 0.1%, and the Hong Kong China Enterprises Index gained 0.3%. Let's go to Wall Street now. In the U.S., stocks ended higher on Monday, adding to recent strong gains, with mega-cap growth shares rising as U.S. Treasury yields eased. Shares of Apple and Microsoft were among the biggest boosts to the S&P 500 and to the Nasdaq. The S&P 500 gaining 0.37%, the Nasdaq Composite gaining 0.59%, and the Dow Jones Industrial Average rising 0.42%. Let's get some analysis now with Martin Smith. He's a portfolio manager at Anchor Capital, joining me. Martin, a very good afternoon to you. Thanks so much for your time. U.S. markets ending higher yesterday. Why?
So what we've seen in the last essentially 6 weeks to 8 weeks is a little bit of a Goldilocks type of scenario where the market is now pricing in inflation starting to cool from here, growth coming off but not too aggressively, and us being towards the end of the interest rate hiking cycle in the States. So I think there seems to be a little bit of optimism that things are getting better, and you've seen shares move quite aggressively to the upside on the back of the sentiment changing. So a bit of a glass half full at the moment, although on the balance of things, I think it's still 50-50 depending on where we go from here. But again, the market's very, very positive at the moment.
Asian markets mixed yesterday, trading higher the last time I checked. There's a little bit of concern in Asia. Just talk us through that.
No, you're absolutely right. And I think there was a little bit of concern around economic growth slowing in China. The market seems to be shaking that off this morning, and you've obviously seen the Asian market pick its head up quite nicely. What we need to remember, though, is that the Asian market is in a slightly different, or China specifically, is in a very different space to the rest of the world, doing the opposite and actually starting to stimulate from here. So that's quite an interesting dynamic, and could see stocks in China start to pick its head up quite nicely. Also positive from a South African perspective on the back of commodities and commodity-driven share prices that we see here. So different dynamics, but largely positive today.
I mean, you've touched on it, but we saw yesterday South African markets closing higher. What was driving that, and what's happening on our markets today?
So again, we are on the back of global appetite also increasing quite nicely. We are riding that. So again, it's quite interesting because commodities have been holding us up quite nicely for the better part of the last 6 to 12 months. But what we saw last month was we saw Naspers and Prosus with the deal that they've done with regards to selling of Tencent shares and buying back their own shares being a very positive contributor to the JSE's performance in July. But again, I think what we saw in the last couple of weeks is, along with all risk appetite around the world picking its head up, we've seen our JSE kind of act accordingly.
Martin, we saw Brent crude oil falling yesterday to around $93.89 per barrel. Why, and what's happening today?
No, you're absolutely right. So, I mean, oil's been down about 4% in the last kind of two trading sessions. And I think while initially you saw oil prices jump quite a lot in the last, call it 6 to 9 months, on the back of fears around supply, that was obviously exacerbated by what is happening in Russia and Ukraine from a war perspective there. Before you had OPEC Plus maybe not quite reaching production targets, but you obviously have seen oil prices increase dramatically over the last 6 to 9 months. What we see now is on the demand side of things, where people are a little bit stressed about the fact that maybe we have a bit of a recession globally and maybe demand isn't really there. So you've seen oil come back on the back of those fears, but you've also seen fears around supply also coming back online. So a couple of things at play there. I think it's still our base case from here that oil stays higher for longer and maybe picks its head up again from these levels.
And then let's take a look at company news briefly. Very good news for Thungela and its investors. What's happening?
Yeah, so Thungela is in an absolute sweet spot at the moment. We saw them come out with half-year numbers a couple of days ago. I mean, the share is incredibly cheap at about a 2 times multiple, about a 50% dividend yield. They are literally in a once-in-a-lifetime type of environment at the moment, with where energy prices are and coal prices. So Obviously, a very, very good and very well expected result from them. We like Tangela, we hold Tangela. We think that the prices will push up from here. Again, they're in a very, very sweet spot. And again, as long as oil prices continue to hold for a little bit more, coal prices continue to hold for a little bit more, I think the share price will take up from here. So positive all around.
And then Old Mutual approving a new Black economic empowerment scheme. Just give us some context into that. And has the market reacted in any way? I know it's been a long time coming.
No, you're absolutely right. And it was part of their commitment a couple of years ago to increase that holding to just over 30%, which is what they've done now. It's about a 2.8 billion rand deal. But if you look at the actual kind of numbers of it, it's about just over 4% of new shares will be issued. It's not massively material from a kind of numbers perspective, obviously positive from other perspectives, but will this move the actual share price itself? Probably relatively immaterial from that perspective, obviously positive from a South African perspective, but in terms of the numbers itself and share prices, market hasn't really reacted too much to that news.
Market Smith from Anchor Capital joining us there, taking a look at what's moving the market and company news. It's time for a short break.